So I would say that India today is very different from the India that we started Scripbox. I think doctors have this thing saying do no harm. I think in financial advisory as well, do no harm should be a fundamental way to look at this. As somebody said, LLMs are word machines that that produce what sounds right.
Yeah.
Correct. Whether it is right is important to ensure when you're dealing with people's futures.
Yeah.
I don't think it's possible at all for us to scale advice for India without using technology, and now that technology is AI.
Yeah.
So for example, in Scripbox, we've always had this thing that we don't have an IDR. So if somebody calls us, a human being will answer the phone. In fact, we had a very interesting, both Atul and I, my co-founder, long time back when we started, we talked about the fact that we want to build a company where our sisters can invest.
Very nice.
Okay. Brothers के साथ थोड़ा रखा होता है, but sisters बनी.
Hi, welcome back to Chai and Chips Season 2. Thank you for joining us. It's been 10 episodes in Season 1, and Season 2, we will try and do things slightly differently. It was in Season 1 more semiconductors and supply chain, a little bit about AI, but this time we will, amongst other topics, dive a little more on AI. Not on AGI or not on hype-led topics, but more trying to answer the question, what must hold true for AI to matter in India? And the first vertical that we will cover is investing. And if you look at it, AI has started creeping into financial decisions and investment decisions on who you trust, what kind of trades you do, how often you trade, and things like that. And if you look at hype and believe so, it is inevitable, seemingly. Better models, better advice, and better outcomes. But reality is not really that clear. Because with AI comes a lot of risks, and that is exactly what we will talk about today. And we'll try and answer a very simple but harder question. What must hold true for AI to be genuinely beneficial for investors, and what can potentially go wrong if AI advice operates at scale of India, millions of investors? And to answer that question, we have with us Sanjiv. Sanjiv is the co-founder of Scripbox, and Sanjiv Singhal, I would say his full name. He has spanned 30-year career across Kotak Mahindra, Citibank, Polaris, and now more recently with Scripbox, which he has done for over a decade. He has operated at the intersection of advice, behavior, and financial technology. And more importantly, I would say Sanjiv brings in a very unique point of view, not from an institutional perspective, but more importantly from an investing behavior point of view. Because investing is not a technology problem alone. Investing is about behaviors, about incentives, and what outcomes people want with the technology that they are accessing. So with that context, welcome to the show, Sanjiv.
Thanks, Prakash. Thank you for having me. Thank you for the very kind introduction.
Yes.
And I'm quite excited about today because it's not just about me acting as an expert, but actually, the back and forth, the interaction. I'm hoping to learn something as well. So
looking forward to. Yeah. Yes. So before we get into AI, I wanted to ground this conversation into investing and financial industry at large. And if I were to ask you, when you look at individuals, not looking at institutions, individual investors, what problems are we actually trying to solve in India?
So I would actually, at a holistic level, I think at a household level, there are two challenges. One is a challenge of saving and investing. And the second is of informed credit. I think both credit and investing are essential for households to succeed in their life goals, financial outcomes. Very often these are taken as two separate things. Most institutions are designed to have them play separately. But realistically speaking, from an household's perspective, they are intermingled decisions.
Right.
From Indian economy perspective as well, I think saving and investing has become a big challenge. While credit has taken off, we've seen a 5 percentage point decline in both the savings rate and household savings. So that's a matter of concern for a growing economy, because savings is what fuels your growth. Capital markets ultimately will direct household savings into productive assets.
Right.
So both at a country level and at a household level, I think these two are the important problems to solve
for. And what's causing that? What is causing the shrinkage, you think?
I think shrinkage is one is growth in consumption, and I think while to a certain extent that growth in consumption has also driven the economy, we in India haven't yet found that balance.
Right.
So how much credit? So credit is driving a lot of the growth. Incomes are not rising secularly. I think incomes are rising in parts of the economy. Incomes are not rising in part of the economy.
Right.
COVID shock. I think we've recovered from it quite a bit, but it actually changed some fundamental pieces in the economy. Now, at a household level, I think aspirations are driving higher consumption. With incomes not growing at the same pace, there is a shrinkage.
Okay.
I think economists would probably describe it differently. This is my financial advisor view of the world.
Right. And with that context, if you look at Scripbox, and you have run it for well over a decade since founding it, what for you changed in terms of looking at investor behavior specifically for India, from where you started and what you see today?
So I think there is a lot more awareness. Right? I think the last 12 years have seen a dramatic change in access to information because of the internet.
Yeah.
Also, I think capital market investing, the mutual fund Sahi Hai campaign has brought visibility to a very, very important vehicle of investing to a very, very large number of people.
Right.
And that has been very, very helpful. The second trend that took off post-COVID was in trading, stock trading. And that has also been, that also popularized capital markets dramatically.
Right.
So I would say that India today is very different from the India that we started Scripbox for.
Yeah.
Right.
So if in that light, when you look at more access to information, more pervasive information as well, especially in investing, it's a lot about trust, I would think.
Yeah.
You need to be a trustworthy person. You need to be a trustworthy organization to be able to advise. In that regard, where do you see AI-led advice play out? Do you see the relevance, or do you see what specifically can it add as value over and above the investment advice you already would have done as Scripbox?
So before we get into this, I'm going to just talk a little bit about, and you talked about not institutional but household.
Correct.
Right? Correct. So I just want to present a framing that I use a lot, which is about that there are, from individual perspective, these things are very mixed up.
Yeah.
But from a professional's perspective, there are actually 3 layers of financial advice. Right. So almost in a tech stack basis, there is a lower stack close to the machine, and there is a application stack close to the user.
Yeah, right? That's a very engineer's way of
looking at it.
Yeah.
So I think there is investment management.
Right.
which is what fund managers, PMS providers do, which is to pick specific stocks, take calls on long-term trends, etc., which is one stack.
Right.
Above that is the investment advisory, which is where you take asset allocation calls or product selection calls, etc., right? Which is what most financial advisors are really doing, right? And the third, the topmost there is the personal finance layer,
Correct.
which is about how do individuals use finance to achieve their life goals,
Yeah.
right? And conversations about life goals, what is appropriate, doing the trade-offs between short-term and long-term,
Right.
knowing what is it that you can do
Right.
and what is it that you can't do.
Right.
That's a personal finance conversation that leads to an investment advisory conversation, and that finally leads to investment management. In most people's minds, they are all mixed up, right? And because India has been a manufacturer product-led market for a very long time, a lot of the conversation actually happens at the investment management layer,
Okay.
right? So how do you pick the right stock? Right. So there's a lot of stuff available on how you can use AI to beat the market and pick multi-bagger stocks and or to do trading strategies in FNO.
Correct.
So that's the layer which I actually believe is an institutional layer,
Okay.
because institutions are best placed to operate in that.
Right.
They have access to resources, and yes, with technology, individuals are now empowered, but individuals don't have the institutional memory of mistakes or biases, etc., which makes institutions a stronger player
Right.
in that space. Whereas for most individuals and households, the other two layers are important. Right. So mostly I'm going to talk about, and that's where Scripbox operates, is these two layers.
Right. Right. The individual layer.
Individual and household. How do we?
Yeah, and the household.
Yeah.
Okay. Yeah, which is a very good description, I feel, in terms of structure of the market and where you operate.
Yeah.
Yeah. And if you were to look at a tool like AI to help the two segments that you talked about, where do you think, because most of the platforms, including Scriptbox platform, would be a combination of user and platform interaction. And sometimes the advice could work with a tool like AI, sometimes it could break. So how would you perceive the pros and the cons of using such a tool?
Yeah. So I think with the current state of AI, which is essentially large language models,
Correct.
with still evolving inference capability,
Right.
I think creating awareness and having access to knowledge and what I would say personalized knowledge at scale is something that can be very useful.
Right.
So I don't understand what asset allocation is. Can somebody explain it to me? And can I keep asking questions to understand that better in my way? Right? Now, there are behavioral biases. Nobody wants to look foolish. People think this is a very simple question. I should know it. I don't feel like asking.
Right.
But with the machine, that shyness or that resistance goes away.
Right.
And I think AI can really significantly help increase the knowledge of individuals about things that really matter to them.
Yeah. Yeah.
A great deal.
Yeah.
Right? And you can do this at scale
Right.
in a pull mode.
Correct.
See, a lot of financial education, and I'd hate that word because education is one way, right?
True.
We like to use the word skill development.
Yeah.
Right? We think money is a skill that can be learned, and and that is best done in my context and my context of both where I am and what is important to me.
Yeah. And that progressively
And
changes.
that progressively changes over time, over a lifetime.
Yeah.
Right?
Yeah.
And I think doing this at scale, specifically the scale of India,
Right.
I think this is where the current LLM models can do a lot.
Right.
I think as they evolve, the second layer, which is what I would call a portfolio construction, asset allocation layer, also I think it can add a lot of value.
Right.
What we still believe is that what is relevant for advice at scale, and that's the problem that we are trying to solve, is expert systems and not necessarily AI.
And how would you define one versus the other?
So I think there's a technical difference for this, but how I define it is distilling the knowledge of experts
Right.
along with guardrails. So you do not want to, like, I think doctors have this thing saying do no harm. I think in financial advisory as well, do no harm should be a fundamental way to look at this.
Right.
And because today we do not have that control over AI, I think having an expert system which may use AI as a component
Right.
in its design as a part of the system is the right way to approach that.
Okay. Yeah, even I have noticed, and I've used these tools time and again, besides, of course, podcast, even for sometimes research as it relates to financial investing. And what surprises me is many times information gathering, fantastic job, but decision making or help in the decision making, you don't know when the model is hallucinating or giving you wrong answers. And if you don't know, you would just go with the recommendation. So are you saying some of the guardrails would limit those scenarios and try to make the advice very, very precise that people can trust?
Yes. Yes.
Okay.
For example, I think it's not just the hallucination, it's also the training data.
It's true.
So it is believed that a lot of training has happened on Reddit data. Right. Take, for example, crypto.
Right.
Is a very big discussion among the tech folks who are also the large contributors on Reddit.
Right.
That has influenced, so you would find if you ask an LLM for advice on which assets to invest in, you will find crypto coming in very often.
Yeah.
Right. We, for example, as advisors, don't think crypto is a asset grounded in, is actually an asset at all.
True.
Right?
It's not backed by any
It's not backed by any asset.
Yeah.
Right? Anything. Right?
Yeah.
So that, so our guardrails would drive us to say, look, filter that out.
Yeah. Yeah.
Whereas if you just go ask a generic model, you'll get that advice.
Yeah.
So you might get, so as somebody said, LLMs are word machines that produce what sounds right.
Yeah.
Correct. Whether it is right is important to ensure when you're dealing with people's futures.
Yeah.
Right. And financial advisory is very long term in nature.
Correct.
Right. It's not like a product recommendation. If you go wrong, you will know in a few minutes or in a day or in a month.
Right.
Financial advice, if it goes wrong, you will actually experience it 10, 15, 20 years later.
Yeah. Agree.
So,
yeah, important point, especially compounding.
Yeah.
We were chatting about just before we started recording. So much of the benefit comes way late.
way late.
Yeah.
Right?
Yeah.
So
Agree. And the model, a follow-on question I would be really interested to know from a technology point of view, when you look at India, and you talked about LLMs with guardrails for advice as an example, do you foresee finance-specific models, as is the case with any other vertical, helping, which you build or the other financial industry players also build to give precise advice to their customers? Is that likely?
I think it is likely. I also feel, and it's very, very personal opinion, and actually also the opinion of my co-founders, is that India is interestingly a country where we have a very solid faith in science. And that translates into belief in what a technology can recommend. Yeah.
Right.
And which may be unique to India. I'm not that conversant with social norms anywhere else in the world.
Right.
But I think in India, scientific approach to advice will always find takers.
Fair point. And you think the advice is easy to give and easy for your customers to adopt, or more difficult for them to actually take in your advice and do something about it?
That's actually very insightful. So and we in the industry know this, that adopting advice is where the challenge really lies. So when we build Scripbox also, for example, so our internal documents always talk about the fact that we are trying to reduce the friction between advice and action. Right?
That's a good way of describing.
Yeah. So so on our app,
Right.
it was always you press this button and the advice is already executed.
Right.
So portfolio is constructed.
Right.
All you do is press the button and you will invest in that portfolio of funds rather than a single fund.
Right.
When you withdraw, you place this thing and the algorithm at the back figures out which are the best funds from a tax efficiency perspective to withdraw from, and it'll just give you that.
Okay.
Right? Rather than going through the whole step of first, then we figure out what to withdraw from, then okay, I will make a basket of that, and then I will press and that takes time. And by that time, you've gotten distracted. Netflix is always more interesting than your money. And you sometimes you don't even what your intention is, you don't even end up executing that.
Very, very interesting.
So reducing that friction is very important. And also, I think layering advice in an explanation that makes it sustain
Right.
for a longer period.
Okay.
Right?
Okay.
It's easy for me to say right now that, look, you should follow asset allocation. Right? But when the world is going crazy and gold is running up,
Yes.
your asset allocation is already maxed out, but you're still tempted to say, oh, should I buy some more gold?
Some more. Yeah.
Right?
Yeah.
So,
In fact, I was having this conversation with a friend of mine a couple of days back, and I was telling him about the recording that is coming up. He was saying his maximum investment for the last 18 months or so has been in gold. And aside, if he had not invested in, maybe the returns would not have been that good. So a lot of it is surrounding your environment shapes your thinking as well to a large extent.
absolutely. I mean, human brain is taking inputs from all over the place. Right?
Yes,
So,
yes, agree,
Yeah.
agree. And as you were talking, I was thinking about it. Every country is different in terms of investors, mindset, behaviors. From years of experience, Scripbox and otherwise, what are the unique aspects of investor behavior in India that you believe the global models, large language models or otherwise frameworks potentially miss?
It's a difficult question to answer, but I'm going to take a shot at it. I think some of the things that are uniquely Indian is about, especially in context of investing, is we think family. We don't think individual.
Okay,
Western societies are highly individualistic.
that's fair. Agree.
Right.
Agree.
So all advice is very individual tailored, whereas here we are looking at family. So all our assets may be owned by different people in the family, but they get pulled together to achieve
The common goal.
the common goal.
Very interesting.
And that has implications for understanding risk. Right? Because as an individual, my risk is different from my wife's. But as a family,
Yeah.
we are approaching things very differently.
So does it kind of, I would say, normalize some of the risks? So if some family, some members are extremely risk averse versus others are risk savvy, if they are pooling resources, maybe it comes to some kind of a balance. Do you think?
Yes, it does. It does. And I think it's also a question of, and that's why we're moving away from the topic, but it's the sense that we always encourage families to discuss decisions or at least have one conversation in a year
Right.
where both or more, even if they are adult children, they come together to participate in that thought process.
Right.
Right.
Fair point.
So it's something highly recommended, and we've seen it work well for clients.
Okay.
So family was one. The second thing is, I think India is a high trust society.
Okay. What do you mean by that?
So I think, for example, there are surveys that say Indians have a much higher trust in government institutions
Right.
than the rest of the world.
Okay.
Right? And we are also, I think, at an individual level, also we are reasonably highly trusting.
Okay.
Our default is not, this guy's out to get me. Our default is, I mean, it bears out in just asking for directions. Right? We prefer to ask people for directions rather than look at a map. Of course, Google Map is changing that behavior.
Yeah.
But,
Fair. So I have read some articles that are contrary to that. People saying India is a low trust society because people kind of try and confirming. But I get what you're saying. There are aspects.
So I think there is a lack of trust, for example, in contracts. Very clearly. Contracts are not trusted. Your word is more trusted. Right. So
Aapki zuban.
Because contract is because enforceable, and that comes from the fact that in the judicial system, enforceability of contracts is a nightmare.
Right. That's true. That's true.
You had a lawyer in your podcast in
Yes.
last season.
Yes.
Right.
Yes.
So
Very fair. Yeah. Good judgment. Agree. So in light of everything you said,
and it may just be my personal opinion, by the way, personal experience, but
totally fine.
Yeah.
And how it is structured, the kind of segments that you cater to, right? What kind of advice do you believe is meaningful for customers, and especially at the scale that you operate, or you would continuing to increase that? What kind of advice you feel is beneficial?
So this has actually been a bit of a challenge for us. What we believe is important and relevant is how to achieve your goals.
Right.
And how to manage risk. So we believe that it's better to prepare than to try and predict.
Right.
And it's possible using statistical probabilistic models to actually plan reasonably well for the unpredictable.
Right.
However, as a country, we are very product centric.
Right.
And the advice that people are seeking is at a product level. Should I buy gold now? Should I buy this ULIP plan? Should I book this FD at 6.5% versus 6.75%? So those are product level decisions.
Right.
Whereas maximum impact in investment, we say the asset allocation is the only free lunch. But maximum impact comes from aligning your investment decisions to your goals, and to an asset allocation that works for you.
And it could be different. It
could be different. It's very personal.
Yeah.
It's very personal.
Yeah.
And then having and following a very disciplined process of reviewing it. What we believe technology can do is reduce that friction and make it easy for people to be disciplined about investing.
Right.
But it also requires an understanding and appreciation that this is important. So part of our kind of approach has been, and that's where I was excited about the fact that AI can actually help increase awareness of things that really matter for people. Is this?
Okay. So if you think about product recommendation from a consumer point of view, or an investor point of view, that is what I'm looking for. I'm also looking for a personalized asset allocation. And right now, Scripbox is doing it individually through your investment advisors, as an example. If you were to replace that with AI as a tool over time, what aspects of it you think AI right off the bat will be able to do a better job of, or otherwise, when you consider technology which can have associated risks like we spoke about earlier, where do you think it can either augment the investment advisor or do a better job than an investment advisor.
Yeah. So just to kind of make a small correction. So Scripbox also does this using technology. We don't use AI. So as I said, we've kind of created an algorithmic expert system which distills that knowledge. So even an individual investing on our app, for example, is able to create a plan and based on the plan get a recommendation on how much they need to invest.
Right.
Get an appropriate asset allocation based on their risk profile, etc. Where it kind of fails today is that when things get more complex, right, and when decision making starts to involve a larger value, I think that's where human beings need to get involved simply because we cannot yet engineer our algorithms to take care of every corner case.
Correct.
Right. Correct. And therefore, it will kind of get supported by a human being. By the way, my personal view on this is that bionic advice is really the future. Human beings supplemented with AI tools and technology.
Okay.
Right.
Okay.
And but human beings are important for making those judgment calls because ultimately we're saying personal finance. It is personal. It is human. There are emotions attached to this,
right?
Which will take some time. Can AI completely replace this? I'm a big believer in science fiction. So if science fiction says yes, then I think at some point in time it will be possible.
Right.
We are some distance away from it right now. Sorry, I think I lost track of the question.
I was talking about in which cases, like the bionic advice that you're talking about, either augmented or AI tool on its own will be delivering advice which is beneficial for the investor.
So I think simpler situations, for example, people getting started.
Right.
It's your complexities are lower. You're really looking for a quick decision making on what to do with your regular monthly investments, etc.
Right.
I think those can be scaled up, and I think from the way we are seeing this, I think current state of AI right now, you said right out of the bat, what it can do is, I think helping people understand at a personal level what the recommendation means for them, right, is something that can happen very quickly. That's something that we are experimenting with, trying to figure that out. We are very conservative. So that do no harm piece kind of stays with us.
It's a great thing for investing in finance world.
But we also want to be able to really deliver high quality advice to a very, very large number of Indians. And therefore we have to use this. I don't think it's possible at all for us to scale advice for India without using technology, and now that technology is AI.
Interesting. You talked about expert systems, and just listening to you have technology in some form of expert system that get over period of time sharpened using tools like AI. Is it a fair description of?
So I think it's a virtuous cycle.
Okay,
it's a virtuous cycle. I think AI empowers people with expertise to, for example, backtesting a model or hypothesis becomes much easier and faster.
True. Yeah. And the other aspect to this is, if you look at, there is so much pressure for every organization to adopt AI because everybody is talking AI, right? Some of it, I would argue, a lot of it is hype. Some of it is reality. Now, operating in an environment like this, every organization is getting pushed through incentives which may be misplaced. And my question is, what might be the reasons for organizations to invest in tools like AI advice, which may ultimately go wrong? What could be the structure of the market that might force such a decision making where automation was not needed?
So I think that's happened with pretty much every technology.
True.
Right. I think people have rushed into it. People have felt CEOs on their quarterly earning calls feel the pressure
Yeah.
to respond to that.
Yeah.
But predominantly in industry, I think cost is always the biggest driver. People keep saying you can replace 100 people contact center with AI completely.
Right.
And yes, that's possible today.
Right.
But what does that mean for your customer experience? Right. And it depends on what context you're using it. So there are some pretty good examples. I think we're looking at an airline's chatbot recently. And it's pretty good. Right. It is better than you calling and waiting for 30 minutes on a line.
Yeah.
Right. And it's able to do that pretty effectively because it's replacing that level of training
Right.
at the. But in the context of, say, advisory for us, there are a number of other things that come in. Right. Because, so for example, in Scripbox, we've always had this thing that we don't have an IVR. So if somebody calls us, a human being will answer the phone.
Oh, is that so?
Yeah.
Okay.
And we've
Has
had
it
this.
always been like?
It's always been like this since 2012.
Okay.
We've had a contact center for support since 2012.
Right.
And it has always been a human answering the phone.
Okay. And any reason
And
why?
8 a.m. to 8 p.m.
Okay.
Right.
And why did you choose that approach?
So we chose that approach because trust, right? Accessibility is a very, very important element of trust.
Fair point.
And if I have a doubt about my money and I'm not able to reach somebody, I am going to be very, very anxious.
Yeah.
Right. And our primary meta ambition in Scripbox is to reduce anxiety for people.
Yeah. Very, very cool. Yeah.
So kind of design. Now, therefore, would say, for example, if I am able to, in my app, solve for the normal use cases, what is left for support is all the anxious use cases. Right.
Yeah.
And that point in time, you don't want to be stuck punching buttons on an IVR and then waiting for a recorded message saying your call is very important to us, but we can't talk to you for 5 minutes.
Yeah.
Right. So,
yeah, agree. Especially when you're desperate to get somebody on the phone.
get somebody on the phone.
IVR can be very frustrating.
And I think most businesses have failed to realize this, that with specifically after the advent of internet and apps, that most normal use cases are now on the app.
Yeah.
And customer support is all anxious use cases, which is also why you see so much flack that companies are receiving.
Correct.
But that's really what you need to solve for. And coming back to this, and I think when I talk about an expert system, the design of this entire system, including things like support, is essential. So we can't build an advisory business using technology if you've not provided this element of saying, okay, if there is a problem, you can always talk to a human.
Yeah. And it will be available 8 a.m. to 8 p.m.
Yeah.
Yeah, good point. And you talked about bionic advice. In AI terms, humans in the loop, as an example, right? For Scripbox, how would it actually work for scale? Millions of investors.
I don't have that answer.
Okay.
I think they're still evolving it. We have some hypothesis. And I think the best way, and that's the digital way, is to try things out, learn from them and evolve.
Okay.
Right? So a combination, what is the balance that works? And the same balance will not work for every individual as well. Right.
Fair.
So figuring that out, using data, even just asking people, what works for you? Right. Is I think the approach that we are looking at taking.
And is that an approach that you have taken for several other aspects of a business, or you're taking it specifically for AI?
I think this is our model today,
Okay.
right? So as I said, you can do everything on the app.
Right.
But if you need to talk to a human being is available.
Right.
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 And the same thing, you want to talk to a human being to clarify some doubts, but then you will go back to the app and do, for example, a transaction execution, because it's just so much easier to go there and do an online payment rather than write a check. Somebody will come and collect it. We will do all of that.
Yeah. Right.
So the different levels of comfort of people for different elements of. So when we say advice, I think people just confuse advice with just the recommendation. But it's also understanding that goes before advisory.
Right.
Right. Ongoing monitoring that goes after advisory.
Yeah.
Right.
Yeah.
The explanation that goes alongside advisory.
Yeah.
Right. And your ability to respond on demand.
Yeah.
These are all elements of that overall advisory experience from a client perspective.
Agree. And you have to, in all those elements I agree with. And one aspect to building trust is doing that on a consistent basis. That benefits the client, and then he or she believes that you have their best interest at heart. And if you can do that with a technology like AI, it could add significant value to the business.
Absolutely.
Yeah.
Absolutely.
Yeah. So on that note, let me take a quick break and do a bunch of speed round questions.
Okay. Okay.
So a little bit of fun, a little bit of finance. So the first question, one investing habit Indians should unlearn from.
I think too much focused on assured returns.
Okay. Especially on gold, more recently.
Yeah.
AI will make investors more calm or more confident?
I think a bit of both. I think investors, I think investing is a lot about optimism and faith. First of all, you have to feel that the future is going to be better.
True.
Only then will you invest, right? And then you have to have a certain amount of faith. It's faith is a little irrational sometimes, right? So while data will prove things, but the fact that equities will beat inflation over the long term is ultimately an element of faith involved in it, right? And I think, and what I was talking about earlier, question, your ability to kind of understand that for yourself at your own pace, which is where AI can help, will help you both become more confident and therefore more calm.
Very interesting. Agree. One AI promise in investing that makes you roll your eyes.
You can beat the market.
Yeah, the best of AI will not be able to do that.
I think short term maybe, which is like even humans have done that. But consistency over a long term is
difficult.
Is very difficult. Right?
Yeah, the best of investors, Warren Buffett, Charlie Munger and all, are like proven over decades. Yeah.
I think there are opportunities that are available because ultimately markets are also composed of humans. So there is momentum, there is undervaluing of things, which can be done. But trading, and I was referring to the fact that you can day trade your way to wealth.
Correct.
Using AI is the one that I was responding to.
Fair point. Your own investing style today: set and forget or hands-on?
Set and forget.
Okay. Any reason why you do that?
I think if you've taken those decisions with the long-term view, then there is a periodicity to your review, which is what you follow. So I follow what we recommend to everybody in Scripbox. So I'm a Scripbox client. Our family is a Scripbox client. So we follow what those processes are, which is about think long-term. Take decisions. Don't take reactive decisions. So more hands-on means hands-on, but like a quarterly review,
right?
Not a daily.
Right.
Where is my money going?
Yeah.
So
that's very good advice for everybody listening in. Agree. Last one. The one financial habit you are most disciplined about personally.
I'm going to do wordplay on this. I think discipline itself is the habit. which is just invest regularly.
Okay.
Relates to the previous question. Just invest regularly, review your portfolio regularly, and that's what I do.
Very good. So you advise your clients what you do on your own.
Absolutely.
Yeah.
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 In fact, we had a very interesting, both Atul and I, Atul is my co-founder, long time back when we started, we talked about the fact that we want to build a company where our sisters can invest.
Very nice.
Okay. Brothers ke saath thoda taka hota hai, but sisters money. So that's, and we're proud to say all our sisters are Scripbox clients.
So very cool. Very cool. That's a good way to articulate your personal mission. Yeah. So coming back, we talked about advice, how it is the segments of the markets, how potentially humans in the loop or bionic advice could play out, and what kind of elements or how Scripbox is preparing for that world. One aspect I did want to talk about is accountability when it comes to AI. Suppose you deploy Scripbox or any financial firm deploys the advice, AI-led advice at scale, and something goes wrong with it. In that scenario, who would be held accountable? Is it the firm? Is it the model that it's based on, internal or external? Or is it broader the institution?
So I would say the advisory firm.
Okay.
Right. Because our business is a fiduciary business.
Right.
Right. And having expertise is part of being fiduciary.
Mm-hmm.
So I think a lot of people just interpret fiduciary at the first level, which is to say you will do the right thing by the client.
Right.
Right. I think the second part is that, is that you have to have the necessary expertise to actually be even able to provide advice.
Right.
Right. And also exercise due diligence. So that is part of an advisor's responsibility.
Okay.
Right. So if you're not done the due diligence to ensure that the tools or technology you're using is doing what is correct,
right,
then that's a failure of your duty. I think I'm pretty unambiguous about this.
Yeah.
Yeah.
And when you look at operating model like that, a country where systems work like that, do you think it comes to pass naturally, or regulators have a role to play to shape it in a particular direction?
I think regulators do have a role to play. But regulators tend to be prescriptive sometimes, right? Because most regulators have a mandate, correct? Just take, for example, SEBI's mandate is to regulate the sale of securities in India. Right? It's very, very, very specific. Right? It's not to regulate advice. That's not what the SEBI Act says. Right?
Yeah.
Typically, advisory is a profession. And I think there is some amount of, but SEBI will define certain guardrails and that we have to follow, and those guardrails will influence what we have to do. And as an RIA, which is a SEBI regulated entity, or as a PMS provider, which is again a SEBI regulated entity, we have to follow those rules. But the fiduciary responsibility goes way beyond that, right? So it's almost a little bit like, again, the Hippocratic Oath for doctors. Right? What the law says, you're going beyond that.
Right.
Because there is and that's a professional code. CAs have a professional code. The lawyers have a professional code.
Right.
I think the fiduciary code is the code for financial advisors.
Yeah. Yeah. Which is like letter and spirit.
Letter and spirit.
Yeah. And if you consider it that way, do you believe a regulator or regulation is constrained, built into design, or it is something that will slow down tools like AI advice in financial investing?
So I think regulator has to be treated as a constraint,
Okay.
right? Because that's the law of the land. Right? You have to follow that. There is nothing you can do without that. Fortunately for us, at least in India, I think all our regulators are very, very consultative. There is access available. You can have conversations, and there is a lot of work always going on in the background. And clarifications can be sought, understanding can be developed. We also have regulatory sandboxes. So there are certain things you can, if you want to push the envelope,
Right.
you can actually, in a regulated context,
Right.
try that.
Okay.
So,
And in that scenario where you have back and forth with the regulator, it's an environment where you can have a conversation towards improving the entire industry. What could be the worst case scenario you can think of when AI-led advice at scale goes wrong?
that's a tough one. I mean, there's a nuclear option always, right? That's how bad it can get.
Yeah.
But I think if you look at, I'm just going to base myself for some, say, algorithmic trading, right? That's a technology that's widely in used.
Right.
And it's contributed to, say, market crashes because it built a loop. Right.
Right.
And therefore, the extent of the crash became much worse than it if only humans were dealing.
Yeah.
Right? And the speed of the financial markets is much faster now. So I would be a lot more concerned when it comes to the third layer, which is the investment management, trading layer, where the impact could be significantly higher. In personal finance, mostly there is always a review cycle.
Right.
Right. So yes, you could make mistakes, but if you're reviewing them periodically, say every quarter, right, you will catch it.
Yeah.
So there is a design of the system.
So it will automatically, in your disciplined cycle of quarterly review, you will somehow get past it.
Get past it is the way I'm thinking, but I could be wrong on this because it's an unknown. It's an unknown. We don't know how AI is going to be deployed by different people.
Right.
So the way we are thinking about it is not the way everybody else is thinking about it.
True.
Right? So it could be that people have greater faith in the technology that they're deploying, and therefore they've not built enough safety protocols.
Right.
Could happen.
Right.
So,
and if you look back in the past, from everything your experience has taught you, especially in the area of investing and personal finance, including algorithmic trading example that you cited, what do you think are areas within the personal investing space that you would not automate with AI advice?
I would actually think that the evolution would be, if evolution is at the right pace, then depending on the capability of technology, and as I said, I believe in science fiction. So at some point in time, in personal finance space, I think everything can be automated, except possibly the how do you manage anxiety
of your clients?
Emotion,
right?
But then AI is also finding a very good use case in therapy, right? So I don't have an answer for you. I would be lying if I'd said I have clarity on this.
It is. These are things I.
What do you think?
I feel areas which, one part emotion-led, which are completely taken up by tools like AI or AI-led advice is very risky, especially if you're saying trading on the basis of past data, whatever data you can think about. Trading is not a perfect science. We already know that. And many people make losses. So automating that on customers' behalf, guaranteeing you a return, Very risky to do. One aspect. The other part would be having a cycle, whether it's quarterly or otherwise, of investing without human in the loop. Putting in an asset allocation regardless, based on data that the AI tool comes up with, an asset allocation without people looking at it. Frankly, I do not think in personal finance especially, without a human looking at it, I feel it's very risky.
I think it's possible.
Okay.
I think, but for example, asset allocation. I think asset allocation is ultimately model driven, right? It's about looking at long-term behavior of asset classes.
True.
And looking at long-term behavior of a mix of asset classes together. So it's a little bit like metallurgy. You combine 2-3 metals and suddenly you get a much stronger metal.
Yeah.
Right? And that's what portfolio asset allocation does to your portfolio. So those are data driven, and but I guess I see what I'm saying, because the way we are imagining this is, while there is a model that is developed, there is human oversight before it gets implemented for clients.
Yeah. And if you do it completely, the reason why I feel it's extremely risky, it's also based on the profile of the customer. So if the customer is fine with quarter on quarter changes done by AI tool without he or she looking at it. Because it would be within guardrails, which you can establish using your expert systems as an example, and it goes. Maybe I do a cut every year because that's the cut which it matters in terms of duration, which is a fair point. So I can remove the humans for every quarter and maybe do once a year. Possible.
Yeah. So that gives the scale then.
That gives you scale. Yeah.
That gives us the ability to do this for many more people.
Yeah. Interesting times. Seriously.
I think there's a lot. So AI is, I think it's a radically new technology. Right? It's opening up our minds to saying what is possible. Right. So if we have this conversation 5 years from now, I might be saying things which are completely different from what I'm saying now.
Yeah. Agree.
Because what it unlocks is still not fully known to us.
Agree. Yeah. If you look at your Scripbox journey, and you talked about how it has evolved over time, your own thinking on investor behaviors, what elements do you believe are aspects where, from an advice point of view or from a trust point of view, doing less nudges, doing less advice turned out to be a better proposition versus doing more?
So interestingly, when we started Scripbox, we started it for the what we call the early saver segment. And our hypothesis was early saver, if you want to build wealth over the long term, you should do using equity. The best way to invest in equity is mutual funds, right? And we will help you, give you the best mutual funds, right? And we use some behavioral finance principles about how less choice is better, right? And we used to have only a portfolio of 4 funds. That's the only thing you could buy on the Scripbox platform.
Right.
That's it. 4 funds, nothing else.
Okay.
Right. So less is more is a big belief for us. Right? I think from a behavioral perspective, lower decision making, lower frequency of decision making, but more deliberate decision making is the right thing. In fact, we debated a lot before we launched our mobile app because 2 schools of thought. Everybody wants a mobile app. That's the requirement now. But a mobile app also makes you more active. Right? So if you are a trading app, it's perfect because you can trade wherever you are, however you are. For a wealth accumulation app, where we basically say don't dig up the plant every day to see if the roots have come out, right? App which creates activity is not the best outcome for clients. Right?
Correct.
So there's a huge debate about whether we should have a mobile app at all.
Yeah.
Right.
Yeah.
We of course gave into so part of managing behavior is also about accepting that there is a certain behavior that clients want to have, which is have access to their portfolio. Right. But that's one of our
Constant.
tug
Tug of war. Yeah.
between what is right,
Yeah.
what clients want and what is right for them.
Yeah. Which they themselves may not know.
Sometimes.
Yeah.
Yeah.
And on that note, if you were to advise any young person who is he or she is starting off their career and there's so many options, AI-led advice notwithstanding, what would be the simplest advice to build a great life financially?
I think save 20% every month. Put it into young person specifically. Simply first start with an emergency fund. I think people start into high growth assets which are volatile before you build an emergency fund. So emergency fund gives you confidence and makes you calm.
Right.
Bring it back. So have enough money for emergencies and then build a long-term portfolio, investing in equity mutual funds. Great product. Simple portfolio, 2-3 funds. Use Scripbox.
Right.
Sorry for the plug. Yeah. So it's not very complicated.
Yeah.
It's not very complicated. Doesn't require much time. Doesn't require much activity. Right. And also make sure that you are learning things along the way. Right. It's one of these life skills. So managing money is a life skill that you should know. It's good to trust people.
Right.
But make that an informed trust.
And what would you recommend people do to build their learning on financial?
I think just there is a lot of information available out there.
Right.
I think we are in an age where information is not the problem.
True.
Right? Which is also, I feel, where LLMs play a very good role in distilling that information.
Yeah.
So using an LLM to ask questions and just ask questions. I think asking questions is the best thing young people can do, both in their career as well as in their money life. Yeah.
And in career, people will be frustrated. Your boss could be frustrated, but
LLM.
Yeah. You can ask any question.
Yeah.
Any number of times.
Any numbers.
Yeah. And if you look at AI-driven advice, you were talking about 5 years from now, if you're having this conversation, it would be drastically different. What do you...
It could be. I don't know.
Yeah. It could be drastically different.
Yeah.
And what do you believe if AI-led advice has gone very well, what outcome could possibly be achieved? What would you term it as success?
I think a lot more people being financially confident.
Okay. Say more about it, please.
So, it's about, money is an emotion.
I've not heard that. Money is an emotion. Yeah.
It's not so much the number.
Yeah. Right.
You could have a very large amount of money and still be insecure financially.
Right.
Or, and you could have a certain amount of money, but know where you are going and that this is enough for me will give you that financial confidence.
Yeah.
So we like to say that a lot of people look at financial planning as an element where, boss, financial plan, they will tell me to start saving, budgeting, then I have to, follow somebody's advice and, constrain my lifestyle. Right. I actually look at it differently, saying a financial plan actually liberates you. Right. It tells you what is possible and therefore it gives you the freedom to, once those things are taken care of, it gives you the freedom to do more.
Yeah. Or to live your life.
So that's what financial confidence is.
Yeah.
Right? So if this works very well, then I think with that combination of knowledge, hopefully an expert system-led advice, not just pure wordsmithing.
Right.
So wordsmith advice is risky. Right?
Yeah.
So I think that for me is a good outcome. Yeah.
Agree. So we're coming to the end of the show. I ask a final question to all my guests, which is that India's investment and growth in technologies like AI is not only about domestic outcome. It's about our place in the global marketplace or global geopolitical landscape. So if you fast forward 10, 15 years, where do you see India from your vantage point, and what should happen today to make that a reality?
So I think about it in the sense that global position will be achieved with local success. Right. So if you look at our technology prowess, so today India has got some of the best banking, I'm talking from financial services background, banking capability, real-time money settlement to anybody, right? And I'm not just talking UPI, I'm talking high-value transactions, right? Going literally in seconds, from anywhere to anywhere, right? And that's been achieved through a systemic, deliberate, step-by-step approach.
Right.
RBI mandated core banking for all banks.
Yeah.
Then built a payment system using NPCI. So RTGS, NEFT, and then UPI.
Right.
So all of these have been built on that. If you look at Aadhaar, right? So the stack has worked for India at scale.
True.
Right? And that success gives us the ability to then take it to the world. Right. It's nice to see other countries adopt UPI.
it.
Yeah.
Agree.
And I think India has the second thing is India, to succeed in India, not only do you have to do scale, you have to do it cost effectively. So I think in this piece as well, also I'm a believer more in applied technology than in just fundamental technology.
Right.
Right. I think fundamental is important. I'm not saying that. But India's problems are more immediate as well. So how do you apply technology at scale cost effectively? We are good at that. We are really good at that. We're getting better at it. Some very visible examples. I would actually expect to see a lot more of this.
Very cool. So we have come to the end of the show. Is there anything that you want to talk about that we didn't cover, Sanjiv?
No, I think this was pretty good. This was actually given me also some food for thought. Yeah, so thank you so much.
No, not at all. You're absolutely welcome. And thank you once again for coming to the studio to make this episode happen. It is a kickoff to season 2. And for folks who are listening in, tune in to our YouTube channel. You can watch our episode on Spotify, Apple Podcast, or any other audio channel that you track your podcasts. Look forward to hearing from you on what other topics, what kind of guests, and which segments would you want to listen more about. And with that, thank you very much.